Hello, everyone, and welcome to this edition of Pearls of Fisdom with Nirmal Bang. I'm Avan Dabash. I'm sure you've all heard the Mumbai Metro, the Delhi Metro, JNP Mumbai Metro Line, JNPT Road and Flyover in Delhi. Well, these are only some of the marquee projects that the leading EPC player with more than 24 years of experience in the construction space has been dealing with. And I'm talking about JKumar Infra Projects. The company is on track to achieve its billion-dollar revenue target by FY27. And with the elections on the anvil, let's understand what this spells for the company as well as for the sector. Dr. Nalin Gupta is the managing director at JKumar Infra Projects and now joins us. Thank you so much for taking time out and being with us. Given the fact that we're looking at the economic momentum further being bolstered with the upcoming Lok Sabha elections, and there's a lot of focus on infrastructure, CAPEX, manufacturing, Mr. Gupta, occupying center stage. In your opinion, how are you looking at the road ahead for infra?
Well, Aman, thanks for having me here. And I would say that the entire infrastructure segment is like, I would say, one of the most important segment which the government is focusing into, because that's the one of the most important area from where employment, the maximum employment generation happens. And it's a chain effect, which I always say, which happens like when 1,000 crore of infra project or a 10,000 crore job is being floated. It has a chain effect of having businesses into the employment sector, into the automobile, into mining, into aggregates, cement, steel. All it's a chain effect happening into the all the business verticals. So government understanding that, it has given a huge budget for FY23. If we see, it had a huge budget that was been allocated to the infrastructure segment. And I think with this focus being, which will be there, because I would say, even if we talk about the most, I think one of the most talked about item, which is the metro segment. Metro, which was earlier, which was started somewhere in late 90s and in 2000. Even after 25 years of span, I think not even tier 1, tier 2 cities have been totally catered with the requirement of the metro network that's needed. If you look at Delhi Metro also, which was started way back in 2000, still they have completed phase 3, where JKumar, we were an important part in that development. Again, phase 4 they have come up with, which again JKumar, we are a contractor in that phase 4. So metro line, and let's talk about Bombay, even though it's the same, because in the span of 10 years, 2016, 8 years back, they started the main metro line construction in Mumbai, wherein they have started 125 kilometer of line, which is still under execution, and it has a planned length of around 350 kilometers. So even in tier 1 cities, there is so much of impact, so much of scope available in the infra segment, which will cater to the day-to-day traffic commission, which cannot be handled only with the help of flyovers. So I think there is a huge infrastructure work available pan-India. So, and it has to have this impact going forward.
And there has been a strong commitment by the government. And let's talk about metro projects, because you are essentially actively engaged in expanding India's metro rail network. FY23 had metro projects make up nearly, I think, 47% of your overall order book. How are you looking at that segment growing? How are you looking at revenue generation from underground elevated metro projects, and what are the timelines?
Well, so I would say that currently, if you look at the order book at JKumar, I would say last year was a historical year for JKumar, where we have bagged orders to the tune of around close to 12,000 crores, taking our order book as 20,000 crore by the end of the fiscal year. So I think the order book has been wonderful for JKumar and also for most of the infra companies, because there is so much amount of work available pan-India that every contractor can even, I would say, go for correction of their books and make some better margin forward, because there is because of the quantum of work available. So I think everybody, if they go for rational bidding, I think they can make some better margins for the company as this the golden period, and go for a rational bidding. So as I was talking about JKumar, we with the order book going up to 20,000 crore plus, and the 12,000 crores of new orders that we have bagged. The major order book coming in was from flyovers and from road tunnels. So because of that, the portion of order book into the metro segment looks like 25 to 30%. But that does not mean that the metro segment has gone down. It's the other segments which have given the bigger ticket size, like we have backed the GMLR job, which is from Goregaon to Mulund Link Road, which is itself like 6,500 crores. Again, we have backed Coastal Road. We have backed the Chennai Elevated Corridor, which is again a golden feather in our cap, with around 20 kilometer of elevated corridor connecting Chennai port to Madhubalam. And we have taken this Coastal Road Package B. We have taken Orange Gate Flyover. So these non-metro segments of the bigger ticket size has taken the order book of metro to around 25 to 30%. But again, there are so many amount of metro jobs that are already coming up in Mumbai and all across the country, wherein around 20,000 crore plus amount of order books would be bidded by JKumar in the coming 6 to 9 months span. As well as there is around 30,000 crores of other works of flyovers, buildings, road tunnels that will be bidding. So there are around 40 to 50,000 crores of worth jobs that we should be bidding in a 6 to 9 months span.
What will that take the total order book to then?
Well, so as of now, as I said, that we sit at a comfortable order book of around 20,000 crore as of end of Q4, that is FY24. And so we expect at least to bag something close to like 6 to 7,000 crore that we will like. I cannot talk about the numbers for the current year because we are in the silent period. But like I would say, we should be reaching a number of around 5,500 crore for the next year. So we always target that more than the order that will means the revenue generation that we'll be doing. We bag orders more than that. So around 6 to 7,000 crore would be our minimum target that we should be able to achieve in terms of the new order book. So we should close little better than 20,000 crore by FY25 as well.
Okay, better than 20,000 crores. You've undertaken a lot of steps as well to improve your operational metrics, your margins. Will they sustain around these levels, 14 to 15% down the line, or can we see it further improve? And what steps are you taking?
I would say till Q3, if you look at the results, it was around 14.5% EBITDA margin that we had been able to achieve. And our so 14 to 15% is surely a comfortable margin, I would say, for the orders already backed by us. And so for the next 3 years, we should be surely able to accelerate our top lines by 15 to 16% with a EBITDA margin which is 14 to 15, the guidance that we have given. But we are working towards making it 15 to 16% in coming 1 to 2 years' time.
And what about the outlook when it comes to the execution work on account of monsoon? Now, as we will be stepping into that season, do you think that we can see some rising costs? Will that lead to delays in overall execution?
Well, I wouldn't say it is delay. Yes, monsoon does play an important role in especially cities like Mumbai. But I would say that as JKumar, we have been working pan-India, and monsoon is a very it's one of the weakest quarter of any of the fiscal year for any infra company. So yes, it would have some impact, but I would say that still the top line of the annual target that we have, we should be very comfortably able to achieve that. And it does not have any price cost increase or escalation, I would say, because all the contracts, as I mentioned, they are always covered with a price variation and escalation clause, which takes care of the increase and decrease in these material prices. So it does not have any remarkable impact in terms of the bottom line.
And are you looking to diversify into newer geographies in the midterm? Your business is currently concentrated in the Maharashtra, Tamil Nadu, and NCR region. What about geographical expansion?
Well, so I would say that firstly, we have in this fiscal year itself, we have opened up 2 new states, that is Karnataka and Tamil Nadu, wherein we have bagged some metro jobs in Karnataka and the flyover job in Chennai that we have mentioned. So already 2 new more states have been added to the portfolio of JKumar. And adding to it, I would also say that we have taken up some new jobs into the sectors like the road tunneling jobs, wherein we have taken the Mathiran road tunnel, which is by drill and blast method. And we have taken up this Goregaon Mulund Link Road, which is India's largest tunnel ever constructed by a tunnel boring machine. So it really gives us a big happiness and a matter of pride for entire JKumarites that we have been awarded the biggest tunnel job in India. And also we have started up different geographical, different vertical, I would say, in terms of riverfront development jobs. Like we have taken, similar to Ahmedabad, Pune is carrying on projects of the development of the entire river that's flowing all across Pune. So we have taken up the riverfront development job as well for that. We have also and similar such projects are about to come in the near future as well. We have also taken up smaller dia tunnels for sewerage tunnels and water tunnels, which it's been executed for the Bombay Municipal Corporation. So I would say these are the three new verticals that we have added in the business segment for JKumar.
Okay, and can you help us with your CAPEX outlook for the year ahead? What is the current debt as well that you're sitting on in your debt reduction plans?
Well, so I would say that in terms of CAPEX, we usually have an in CAPEX means at net level, we have around 5% of the net block that we keep adding every year. And then there is an incremental CAPEX of around 150 crores that we do every year. And that's to maintain the existing CAPEX and to have some add-ons that we take up for the new jobs. But this coming next 2 years, we'll be doing an additional CAPEX of around 400 to 500 crores, which mainly gets added due to the tunnel job that we have taken up for Goregaon Mulund Link Road, where we have to buy 2 tunnel boring machines, one by us and one by our JV partner, as well as the Chennai elevated corridor, which is around 20 kilometers long. So these 2 projects are going to have some additional CAPEX of around 400 to 450 crores in the coming next 2 fiscal years.
Okay. And give us a sense as well as to what the outlook is when it comes to, the segments within which you're seeing demand in terms of, you were talking about the metro and the non-metro, but can you tell us a little bit more about the acquisitions as well that you had recently? There was the PRF Construction. Which are the other acquisitions lined up and how will that help your segmental growth?
Well, so we have recently taken over PRF Construction Systems, which is a company which is into manufacturing of molds and into fabrication items, basically. So this unit being there in the outskirts of Mumbai and being related to the business in which we are already operating, like every project that we take up, whether it is metro or flyovers, we need to get the molds fabricated for metro and flyovers in both the segments. So this unit will help us to add to our requirements, timely fulfillment of the requirements of these molds. And it's a asset based, the asset and everything involved in it, it's a ready to operational factory which we have taken over. So it would surely help for the timely requirement of our projects. So that's how we have acquired it. And I think it's a good call that we have taken and we have already started the process for it. And so I would say right now, as historically, if you say for almost like 4 decades, our major focus is into the structural areas, like whether it comes to elevated metros, it comes to elevated flyovers. You talk about Dwarka Expressway, which has been recently inaugurated by the Honorable Prime Minister of our country. So it was again an elevated corridor. Chennai is again a similar elevated corridor. So structural work is the main focus area of our organization, where because you have to come up with a USP, a specialized job, and where some engineering is required to another level. Also road tunnels, metro tunnels, elevated metros, underground metros. So structural area is our core area of focus, and we should be able to continuing into that, though we are also present into building jobs, into roads, into access controlled expressways. So we would try to focus and remain into these segments.
And you're aiming to be $1 billion revenue company by FY27. Are you on track, and what will drive that growth?
I think we are very much confident with the order book that we have bagged this year, and close with a closing order book close to around 20,000 crore by FY24. and the projection that we had given, like we want to become $1 billion revenue company by FY27 with an order book closure of around 25,000 crore, looks quite realistic and achievable for us, and the entire team of JKumar is working towards that.
And since this is Pearls of Fisdom, you have been in the infrastructure space, you have built this company. Any pearls of wisdom that you would like to impart to aspiring entrepreneurs or businessmen, especially related to this sector?
Well, I would say that there are three important points which I feel it's required by any entrepreneur or a good organization. Is the biggest thing I consider is the human values, the relations with your team, which is very important, because you can buy machines, but you can't buy your people. You need to earn them. So I think that's one of the very important part, because as Team JKumar, whenever we take up any job, the team is totally full of excitement, full of confidence that we will take up this job, we'll complete it on time with the best quality possible. So I think that human resource management and valuation of the team is very important. And second thing, what I feel is that every company needs to ensure that the order book that we take are not on a desperate basis, where just for the heck of taking orders, we take it at any numbers, because it takes a toll on the entire health of the organization, wherein like it's around 3 to 5 years lifespan you put on to completion of that job. And if you're taking it at bad numbers, you're not able to execute, or you start going into negative cash flows. And similarly, the third point, most important, that JKumar we try to believe and follow, is the financial discipline in an organization. So if you look at JKumar's debt equity ratio, at gross level, we are at a debt equity ratio of just 0.25x. And at net level, we are almost a debt-free company. So I think the financial discipline in any organization, whether it is small, medium, or large scale, we have seen failures of large companies just because of the serviceability of the debts that they have taken. So I think if we can manage the cash flows, if we can manage the debts, I think that would be one of the very important factors in a healthy running of a company.
All right. Thank you so very much, Mr. Gupta, for taking time out and joining in, sharing with us your pearls of wisdom, as well as the outlook for the sector and JKumar Infra Projects.
Thank you, Avan. Thank you for having us and able to put our points to you and to the industry. Thank you very much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.